You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it is time to rock out once again with the option block. Yep, it's time to kick off our post-holiday broadcast week here. My name is Mark Longo. I'll be your maitre d' here for your week-long of options enjoyment here on the network, kicking off with the option block. If you like what you hear on this program or any of our programs here, of course, head on over to your platform of choice, wherever it is, Google Podcasts, Apple, iTunes, Stitcher. A lot of you on Podbean, apparently. Who knew? All sorts of places. Wherever you get it, YouTube, we don't judge. Just leave a review so other folks can continue to enjoy and discover the network. And, of course, keep those questions, those comments coming. We do love to hear from you guys. And joining me on the old all-star panel today, first off, let's go out to the most tranquil of hamlets, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program on this fine post-holiday Monday, sir. Have you recovered from your 4th of July festivities?
Getting there. I got to say, we had a party at the house and just up and down the rivers of St. Charles, just with all the fireworks with which we were seeing. I got to say, it was with the city fireworks canceled this year. It was no doubt the best non-professional fireworks show I've ever seen in my life.
Yeah, it seemed like people really took that to heart this year. No official fireworks here in downtown Chicago, as I'm sure in probably most of your towns as well out there listening. So folks decided to just do it themselves. The old DIY spirit taking a hold of everyone here, and explosions and bombs and bottle rockets going off pretty much everywhere throughout the city, including right outside my window here, 13 stories up last night, which was pretty impressive, to say the least. Also as impressive are these markets yet again, so let's get to it. A little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. At this point, I'm even loath to say it because it just sounds like I'm repeating myself, but don't blame me. Blame the markets. They're the ones that are repeating themselves. Yet another strong start to yet another trading week, another resurgence of Corona, and the market's saying, you know what, let's just ignore that. And let's just look ahead to further bullish, optimistic outlook. It's weird because in recent weeks, we've seen maybe Corona outweighing and the market's not really giving a crap what's going on overseas. They certainly didn't give a crap about the Hong Kong laws and all the tightening of restrictions over there, and perhaps some easing of, or I should say, ratcheting up of tensions with China. That certainly didn't spook the market last week. It was all bulls all the time on that front. And now this week, all of a sudden, its market cares about China to the tune of very strong economic data coming out of China, really lifting most of the Asian markets, and indeed that joy, that effervescence carrying over here into the U.S. as well. Coming into today's session, we saw the Nikkei up nearly 1.5%. We saw the Hang Seng out of Hong Kong there up 3%, surprising given the fact of what's going on over there, but still not capping their joy over there. The Shanghai Composite up over 4%. So coming into today, our markets were feeling the lift as well. S&P, once again, kind of the Goldilocks, up about 1.4%. The Dow up a meager 1.3%. NASDAQ up over 2%, 2.12%. Once again, feeling the force in the market saying, you know what, tech is going to lift all boats out there. Despite the fact that some interesting thoughts about taxing them a little bit differently over there in Europe. We know they tend to look askance at our tech behemoths here in the U.S. and maybe starting to do that yet again. None of that really is cause for any concern, any pause out there. Everything's rallying except for crude. Crude's about 40.5 off about 20 cents. So WTI resting a bit, pausing a bit north of that 40 handle. If you listened to TWIFO last week, me and my Mr. Dr. Rhodes over there, we were breaking down the fact that the skew showing a bit of a fade north of 40 there in WTI. So the options market in WTI not exactly pricing in strong enthusiasm north of 40. Seems like that being reflected a little bit here in the market today. But a lot of interesting stuff to parse. Let's start once again with the Uncle-list of Mikes. Mr. Uncle Mike TOSAW. Mr. Uncle Mike, sir. Another Uncle Mike start to the Uncle Mikest of weeks. What is lighting up your tape, sir?
I mean, everything is awesome. There's so much going on right now. In looking at stuff, you do have to hand it to tech. I mean, Amazon 3000. We've gone through a lot on this show, and I'm just thinking back in the 900 some odd episodes that we've done. If we could go back to like episode 20 or something like that, saying this show will live to see Amazon crossing 3,000, I think we all would have been doing a lot of grinning at that point in time. So that's kind of a big thing of what's just going on in general with things. With that, the main thing that I'm looking at right now, of course, is tech leading the charge for the market today, or pretty much leading the charge with everything on the tech-heavy NASDAQ, with that up the significant amount with which it is. But with the coronavirus, the one thing that I can say right now, and that I can consider myself an expert on, is the fact that I hear everyone is an expert on it. And that's just what it sure seems to me with it. So everyone seems to be an expert, and people can kind of parse the data in whatever way with which they want. I think there was this viral thing going on around Facebook where it showed some lady making fun of the reporters. Don't go outside unless you have to go outside, but make sure you stay in unless you should go outside. Just kind of went on like that for like 5 minutes or so. But that seems to be the general trend we're getting from the media right now. I have some clients that absolutely hate Trump and think that he's the worst thing ever. And I have other clients that love him. I have some people that I talk to that think that everything's overblown. Other people that I talk to that think that this is going to be a second wave, and we're going to have to prepare for every bad thing coming. And you just don't know. And that seems to be the one thing that everyone claims to be an expert on numbers and things like that. But the one thing that I'll claim to be an expert on is that I don't know. I'm an expert on not knowing about this and hearing everyone that claims that they know and seems to be an expert on it. So one thing that I will, me personally, we're trying to do whatever we can to avoid this, but we got to live our lives, of course, because if one thing that I am an expert on is that if we shut down for a long period of time, it's not good for business. And so in general, so that is one that I am an expert on. So I think right now, with everything with which we have going on, it appears that the market is looking at things in that it doesn't seem to be that our death rate does not seem to be skyrocketing. And that was one of the main concerns. Now, we are having more cases coming, and cases are spreading a lot in younger people. So maybe that's the market's viewpoint, is that so long as people aren't dying, we can be okay with this. Now, going on with that, the virus is spreading, of course. No one can deny that. But with it, the other thing that needs to be looked at is that hospital occupancy numbers are higher, but then you could also argue that, okay, maybe now someone who was going to have knee surgery 2 months ago can finally have it and feel safe having knee surgery. So that's going to take up more of a hospital space. So there's a lot of numbers to parse out there. The one thing that I will say is that we as Americans, we have been through this before. I'm very optimistic about our future, but in terms of my trading, what I'm looking at, what I'm doing, we're in a negative market on the year still. And so as long as we're in a negative market, I'm not going to be ultra aggressive.
All right, Uncle Mike, not ultra aggressive, not usually ultra aggressive anyway, but these days even less so out there. That little bit of outside ambiance means we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. How was your 4th of July holiday? And also, what is lighting up your tape on yet another strong start to the week, sir?
Yeah, it was wonderful. I went to my sister's house and had a little birthday party for myself, and then a birthday party for the United States. It was about as good a weekend as you could have. So, I turned 35 for the 7th time on Friday. So, lots and lots of fun. Or on Thursday, I'm sorry. And well, you can tell I'm getting old because I'm forgetting things now. And in terms of the market, listening to Mike, I think the biggest concern for me right now is the continued kind of multiple expansion in the big five, and the way they're taking up more and more and more of the major indexes. With Apple and Amazon and these names exploding. Meanwhile, there's news about them getting investigated by the EU and all kinds of antitrust things starting to fly here. So it is a really interesting time to be looking at stocks. I could not stress this enough. If you are carrying a portfolio that's long the triple Qs and long SPY, you are Texas hedging yourself because you are carrying a lot of 5 names. And so that's kind of my big concern. But that said, the market just continues to rise, and we continue to see weakness in the Russell 2000, in the mid caps, in energy, in financials, in industrials. It's tech or bust for the overall stock market, and it's really impressive the way that a lot of those names have just gone straight up.
Yeah, impressive, terrifying. You can use many different adjectives to describe this rocket ship to the moon out there, in spite of the fact, like we mentioned at the top of the show here, all these other things that are still out there. Of course, China lifting a lot of the boats out there. You mentioned some of the lingering concerns coming out of the EU now about these tech behemoths. I think as they continue to outpace the market, that sort of scrutiny is only going to grow. And so, yet those stocks not reflecting any concerns. It is amazing how the market has this armor. It just can just shed off any weighty concerns out there and keep barreling though. I've said it before, I'll say it again. Once they finally have this corona in the rearview mirror, however that takes shape, whether it's herd immunity, whether it's a vaccine, whatever that is, at that moment, I've had my doubts about this rally here. At that moment, you gotta kind of just buy into this damn thing, because a trade war couldn't stop it. A freaking global pandemic could only briefly pause it, unless there's a hot shooting war somewhere that really spills over. I'm not sure what the hell it could be that could derail this bull, and it could really go for another 20 freaking years. It's just the enthusiasm is there, and it will just buck all concerns. And if there is a concern, the Fed will step in. So that Fed put, we've always joked about it, but very, very clearly real out there these days, which is interesting. What also is real is the volume. Let's see what's lighting it up out there across most of the major indices. VIX doing some decent paper today. By the way, I'm not sure you mentioned here coming into showtime, we got so busy what our old friend the VIX Cash is doing. People always say, downside equates to VIX movement, but there's enough movement in the indices, listeners, to give our old friend VIX a little bit of juice. Also getting probably some of that holiday juice back from the extended weekend here at about a little bit north of 27 3/4. That puts it up slightly on the day, and also up about a point from our last show out there. So all you thought VIX would be getting annihilated with this rally, a little bit of firmness out there. VVIX at about a 114.5 coming into the start of the show, puts it down about 5 handles from last week. And our old friend VXX was at about 31.75 when we kicked off the show, puts it up about a quarter of a point from where it was this time last week. VIX doing about 250,000 contracts as of a few minutes ago out there in the options. That's pretty decent paper considering the ADV is a little bit north of 400K out there. SPY looking at similar levels out there, not quite as robust, about 2.4 million. The ADV out there is about 5.5 million. It's not quite half of its ADV, but looking pretty darn close. SPX at about 522,000 contracts as of a few minutes ago. The ADV, 1.2 million. So the ADV, people have been watching that for ever since the pits came back, and ADV ticking up ever so slightly up to about 1.2 million right now. The Q, 709,000 contracts on the tape. So strong day out there in the Qs. Like I mentioned, NASDAQ leading the dance. So the Qs are just feeling the love despite the fact that a lot of the world is looking askance at them a little bit right now. But doesn't matter. Tech is off to the races, 709,000 contracts. ADV closing in on 1 million in Qs land, 937,000 contracts. And the IWM at 240,000 contracts. The ADV, 712. So kind of light out there in the world of IWM. Let's move on to the top 10 most actives. Doesn't cost you that much to break into the top 10 today. Decent paper, not a ton, not talking 200K or anything. It costs you only 176,000 contracts to break into the top 10 today. That gets you to square. Number 9, Bank of America, somehow socially distant from our friend across the street there. Usually those tickers are locked. I don't see our friends Boeing across the street anywhere, so not in the top 10 today. But number 9, Boeing, I said it already. Bank of America, 196,000. Number 8, Amazon, the Amazonian, firmly in there at number 8, 227,000 contracts on the tape. Number 7, AMD. Now we're gapping up. 270,000 for AMD. So now it's getting pretty firm. Number 6, Facebook. 287,000 contracts. They've been very much in the news of late, very much in the crosshairs, and yet feeling the love from a stock perspective and from a volume perspective. 287,000 contracts, out there. Number 5, the aforementioned Softy. Microsoft, 289,000 contracts. Then we jump up again. Number 4, Baba. Over 300K, all the way to 349,000. Number 3, NIO. Chinese electric cars back in focus there. 453,000. That's usually enough for the number 1 spot. Not today, listeners. Numero dos, Tesla, just edging them out. 460K out there for Tesla. That means you know what number 1 is. Apple, as of a few minutes ago, had yet to cross the 500K level. 499, just ever so close. Just hovering there at that 500,000 mark out there. It looks like it's going to be another strong day out there for most of those names. If you're looking at other names saying, what can I keep an eye on until the next earnings cycle really kicks off with gusto? Still some names popping off here. Tomorrow after the bell, we've got Levi's. So if you're interested in all things denim, Levi's got you covered. Let's see, stock was at $13.35. They were pricing in 99 cents. In the past, they moved about 60 cents. So looking in for a little bit of extra juice, which is maybe bucking the trend from some of our previous names last cycle. We've also got, what do we got here? PAYCX Inc. coming out before the bell tomorrow. They were at 76.5. They were pricing in $1.57. They've moved $1.27 in the past out there. Also got our old friends, the Walgreens Boots Alliance. I just like saying that name. It sounds like a evil alien race from Star Trek. They're hanging out with the Romulans out there. The Walgreens Boots Alliance, they were at about $42 as of the time of this report. Remember, all these reports come in courtesy of our friends over there in ORAT's land. Check them out for yourself, orats.com, or read the reports at our website, theoptionsinsider.com. Straddle, they were pricing in about $1.94. In the past, they've moved $2.06, so a little bit light for the Walgreens Boots Alliance. They're popping off before the bell on the 9th. So there's a little bit of your breakdown for what's lighting it up out there from an overall earnings perspective. We touched on this earlier last week with the Rock Lobster. It's middle of the year. We like to check in on how things are trending in the overall option space. We touched on the fact with the Rock Lobster that Maine is no longer the mecca for options. It's not even in the top 5, at least when it comes to Google search data out there. Some other interesting nuggets we came across in our search as we do our mid-year update here, listeners. First off, when you search for options trading, the number 1 related topic that Google suggests to you, as a result of what other people have searched for, obviously, is terrorism. So for some reason in Google's vast algorithmic brain, options trading and terrorism are inextricably linked. In fact, number 2 is market sentiment. Market sentiment is the number 2 to terrorism. So people search for options trading and then terrorism. That kind of brings to mind all sorts of the crazy conspiracy theories we've heard about the 9/11 bin Laden puts and things. That kind of puts that back into stark relief. Clearly people still maybe not thinking directly about that, but something analogous is going on out there, at least according to Google. That was a bit of a weird one. If you're wondering, call option interest coming off a little bit, which is kind of interesting given the fact that we have seen a bit of that rally extending. But remember, Google marks these in terms of interest, with 100 being the utmost over the past 12 months, and the other numbers representing some proportional percentage therein. So a year ago, call options trading interest was at about a 25% compared to where it is, where it was, I should say, about a week ago. And it peaked out about 100 about a week ago, and now we're at, looks like, about an 86 or so out there. So still pretty strong, but not quite bearing the needle like where we were a week ago. Also higher, worth noting, than we were at any point during the big March sell-off, still right now. So options, call option, I should say, interest, still very firm out there, which is interesting. If you're wondering who likes calls, what parts of the nation are searching for call options, well, it's Vermont, number one. So Maine has lost its cap to its neighbor over there, Vermont. That's going to make the Rock Lobster very happy. Number 2, New York. And then number 3, New Jersey. Number 4, Massachusetts. Number 5, Hawaii. You're hanging out in the sun, living in paradise. Why not search for some call options? Apparently that's what they're doing. Put option interest. I bet you guys can guess where that graph pinned itself at 100. Yeah, if you said the week of March 15th to 21st, you would be spot on. It was at 100 there. Actually, maybe this is a good sentiment indicator here, perhaps, because that interest kind of waned. In fact, it fell below 50% a couple of weeks ago. Now it's back up a little bit. I think some of those recent sell-offs shook people a little bit. It got up to, looks like in the 60s right now. It's kind of hard to read the end of the legend of this graph here. But it did pin the needle back at 100 back in that mid-March, and we've kind of drifted lower ever since. So put option interest spiking in March, pun intended, and then rallying to the south ever since. So if you're looking for sentiment, the put option searches seem to be backing that up. If you're wondering where the mecca is for put option interest in the U.S., that would be D.C., the District of Columbia. Number 1, number 2, New York. So that probably makes some sense. Number 3, Massachusetts. Interesting. Number 4, New Jersey. Number 5, California. So there you go. If you're wondering how options interest shapes up in these great United States on the heels of our country's birthday, there it goes. As we keep on rolling into our next segment, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, time to get weird, time to get wild. Our Eye of Sauron has been running the entire time that we've been talking, trying to find something interesting. Let's see what it found, Mr. Meatball. I haven't looked at these really either, so these are all hot off the presses and new to me, new to both of us here. Let's kick it off. This is a newcomer to the show as well. This is National Beverage Corp., ticker symbol, appropriately enough, FIZZ, F-I-Z-Z. Trading right now $65.30. These are up about $1.50 or a little over 2%, about 2.2%. Let's go back and see how our friend has fared. A year ago, it was trading $44.82. So FIZZ, feeling the fizz over the past year. Really effervescent year. I'm going to keep going with these beverage puns, but let's see. It hovered in that level till about, looks like November. Then it started rallying, got to 54.5. Then it sold off again, but a slower sell-off, not like the rest of the market. It kind of peaked in December, then slowly drifted down to its mid-March low of 37.21, and then it pretty much never looked back. Got up to 52.25 by April 14th, and then by June 14th or so, it was trading north of 60, and up to where we are right now, 65. So it's been a pretty aggressive recovery, a pretty slow sell-off. Looks like a weird chart here in FIZZ. Looks like they just post earnings not too long ago, 4 days ago out here. Let's see what FIZZ is up to, what our Eye of Sauron found out here. It looks like meaty puts, Mr. Meatball, to the tune of the October 70 puts. So these not quite $5 in the money, but pretty close. Pretty meaty nonetheless. The market was $9.60 at $10.50. They went up for $9.90. So you could say they're leaning towards the bid. A kind of an absurd market, decent fill, I guess you could say, but that market kind of obscuring things because it obviously wasn't where the true liquidity was out there. This going up over there on the NOM. Their next cycle, like I mentioned, they just had earnings, so their next earnings cycle is beyond this, is on September 3rd. So our options are beyond where this earnings trade is going up. So this is not exactly an earnings play out here. It's like someone wants to hedge through the earnings, perhaps and a bit beyond, or perhaps looks like maybe they're drawing a line in the sand here. Mr. Meatball, a couple of things to unpack. First off, are you a fan of fizz? You like yourself some fizzy beverages. B, what do you think our friend is up to out here? You think they're drawing a line in the sand, or you think they're hedging through the earnings cycle, sir?
Yeah, it's an interesting one. Fizz makes what, LaCroix? Is that LaCroix or?
I think so. Let's
bubbly?
See. They're based in Fort Lauderdale. I know that.
As a huge LaCroix fan, I may not be an unbiased source on this. So these are in the money puts that trade on the bid. So, the question is, is this a hedge or is it like a backdoor covered call, which you can sometimes see happen, where someone will trade an in the money put, collect the little bit of premium with their plan being to take delivery. And if it happens to rally above that level, that might be a level that they don't want to have ownership anymore. So, there goes a John Deere golf cart, folks. It's definitely a weird one. My guess is that this is is it hard to borrow? Because that would be the other thing to look at. Is this a way of going long a put and long and then being able to short the stock? I gotta say this is a little bit of an odd one, but my gut, which is not what it used to be, but it's still there, is maybe this is a put sale to try and get into the stock, or something around trying to be long more than it is trying to be short.
And looking here, they are not hard to borrow, but they do produce LaCroix, so you can be excited.
Well, there you go.
They also make Everfresh and Faygo and Shasta.
Oh, I'm in Detroit, so I'm in the home of Faygo. If you've not had Faygo before, folks, you are missing out.
Is that like an RC or is that like a rip-off Dr. Pepper? What is Faygo?
So the one that my father-in-law likes is the orange. So it's very much like light cola from back in the day, or an RC, something like that. But they specialize more in the flavored soda than in traditional colas. So they've got like Faygo purple, Faygo orange, Faygo ginger ale, the type of stuff that goes really well with, like, say, vodka or rum or ginger ale.
Yeah, my impression of them is they have, I think of grape and like weird flavors. It sounds like that's what Faygo. Not being a native Detroiter, whatever they call those folks up there, myself. I'll take your word for it out there. As we move on into our next name, let's put, we're going to put these fizz calls before we move off of those. We're going to put those in our to-be watch. We're going to come back to those, see what the heck our friend was up to, and maybe figure out how he fared as we move on to our next name. I mentioned these earlier in our top 10 most actives. It's rare to have one of those make an appearance here in our odd block, but it is today. Kind of a weird day. Decent size paper out there net in the most actives, yet the interesting prints are kind of few and far between. Alibaba is back here in the odd block. It's been a while since we talked about them, at least on the odd block. Ticker symbol, of course, BABA. Trading today, $239.11, up $15.50. So they're obviously feeling the love off these Chinese numbers out here. A year ago, they were trading like the rest of the market, like Amazon. They were trading well shy of where they are right now. They were trading 168.5. And of course, you probably can figure out how this chart looks. They peaked a couple of times. They peaked in early January at 230 and then sold off a bit again, then rallied back to about 222 in mid-February. Then we know what happened. It sold off, got down to, looks like about 176 and change, and then rallied back up to where it is right now. It was in the middle of another sell-off. They got down to 215, and now these latest numbers out of China just catapulting them up, like we said, about 7% today. So a good day here for BABA. Let's see what we saw out here, what our Eye of Sauron, I should say, what it saw out there. I would have expected today's upswing to be some call palooza. That's not what we're getting, though. Maybe our Eye of Sauron flipping the script on us a little bit, wants to surprise us. Let's see. It was the SEP 235 puts, so slightly out of the money puts here in September. Meaty, though, nonetheless, like as you would expect. Everything in BABA is pretty meaty. These going up 1,752 times for $12.35. This market was a little bit tighter than our other market we just talked about in FIZZ. BABA doing a little bit more paper, I do believe. The market was $12.35 at $12.75. This guy wasn't screwing around. This guy said, you know what? I'm taking that bid for all it's worth out here, going up. I guess he got all he could at 1,752. Let me see if this strike is doing any more paper out here today. No, it doesn't seem like it's a ton. That was the print pretty much out here. Well, total, let's see, it looks like a total of 3,600 or so have traded on the day. So about roughly 2x. You got two of these off, it seems like. But we're going to focus on this one for now. This guy crushing the bid. Obviously, this is opening over there on our friends, the MIAX out there. Interesting, Mr. Meatball, worth noting they do have earnings coming up during this cycle. Not quite that close to SEP expiration, but they're in the middle there on August 13th. So BABA coming back soon in about a month and change. We'll be seeing some numbers out of them. So Mr. Meatball looks like got a little bit of the old line in the sand. This guy not messing around, saying, I'll take that bid for all you can give me. And looks like he's doing it a month or so post-expiration here in a slightly out-of-the-money set put in BABA, sir. What's your take?
Well, if you've seen this thing go off to the races, it's a bet on China, and you saw that the Chinese government was out saying, hey, go and get your stocks. We're seeing money flow into Chinese stocks. We're seeing money, obviously, flow into U.S. stocks. So, this is, in my opinion, very, very much a line in the sand type of trade. And, goes along with kind of what we discussed at the top of the show, where, you're betting on the winners to continue to win with this trade.
Let's see if the winners can still win with our final name. This is a newcomer to the odd block. This is, I like the ticker. This is Genius Brands International, ticker symbol GNUS, or they probably want it to be called Genius. It's GNUS. I'm not sure if it's a Genius ticker. I like calling it GNUS, or maybe News. There are plural news floating around out there. Gary GNU, if you remember that old show, the Great Space Coaster from back in the day. Trading right now, GNUs, $2.84. So if other names were too rich for your blood, yet you still like to trade options on cheap names, we got you covered. This thing taking a hammering today, off 72 cents or nearly 21%. This is drubbing out here. Weird stuff afoot. Let's look at the chart here really quick. A year ago, it was trading $1.32. Then it kind of slowly slid into obscurity, got down to the 52-week low is 5 cents. This thing was pretty much delisted or going to be close to it until not too long ago. Until, April, it was trading 26 cents. And then it started getting a lift. Then it got a huge pop. Oh, my God. Up to $7.93 in June. This smells like something funky is afoot. The description here says this company was formed in a merger of Genius Brands and A Squared Entertainment. So either this is some corporate action, maybe this looks like a nice old pump and dump chart here. But, got up to a 52-week high of $11.70. So 5 cents to $11.73. If that's not pump and dump-ish, I don't know what is. At least from a chart perspective. I don't know anything about this company here. It's not one I follow here. It says it's founded by some guy, Andy Hayward. I'm not sure. Looks like some folks, maybe he's in children's entertainment. But it seems like the deal that's causing issues right now is they announced some sort of Stan Lee universe. And apparently, that might sound like that'd be a good deal for the stock. But apparently, the market is not liking this at all. Crapping all over it because they're crushing it here. And this chart is just absurd. Just looking at this chart, listeners, like stay the hell away from this thing. But let's see what our Eye of Sauron found. Oh, 1,194 of the GNUs, July, expiring on the 10th. These are weeklies, expiring this week. 1.5 calls. These are terrible. 1.5 calls. So 1.5 strike calls, listeners. Going up for, yes, $1.50. So they're the 1.5 strike calls. Someone paid $1.50, about 1,200 times for these things opening over there on the Arca. This just makes me ill to my core. All of this, trading $1.50 options on a stock that used to be a nickel not too long ago, a couple of months ago. Trading options on the strike, the price that is 2x strike. All of these things make me kind of shudder a little bit. I shudder to think what this person was thinking or what their intents are. The market was surprisingly tight, $1.45 at $1.50 for these nonsense options. But I don't know, Mr. Meatball, does this one make the hairs on the back of your neck stand up like it does mine? Paying $1.50 for options on the $1.50 strike on a stock that was trading a nickel a few months ago.
That is a really odd one. Is it just like a weird way of trying to take delivery without having to file a 10Q? Or is it, someone just looking to exit? Or is it, because that's like the absolute that's the absolute most that could possibly trade for. Or is it tied to some weird structured product? Would be the other way that maybe something like that would happen. But this feels a little bit like a screw the customer trade, doesn't it?
Yeah, I don't see many ways unless GNUS rallies immediately back to its ridiculous highs of a few weeks. I don't see many ways that this trade does well. But we're going to keep an eye on this one. Yeah, this whole thing just makes me not comfortable, listeners. This entire movement of this stock, the thing rallied apparently off the news of a conference call it was going to have coming up to announce an exciting business development. Yeah, this is old school pump and dump territory. A lot of people are fading this, whatever this Stan Lee thing. You can't not. The stock is absurd. Apparently has non-existent float as well out here, which is also probably what contributes to a lot of what's going on. Yeah, to say this is short sale restricted is to put it mildly out here. Do you trade GNUS? Have you been watching this one, listeners? This is terrible. So we're going to keep an eye on this one. We're coming back to GNUS pretty soon. It expires this week, so we'll see how our friend fared. Maybe he knocks it out of the park. Well, what do you guys think about this crazy GNUS deal? Meanwhile, it's time to find out what Uncle Mike thinks. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. It's Monday. It's post-holiday. We're all recovering from a blitz of barbecue and fireworks, at least the homemade variety here in the U.S. this year. Mr. Uncle Mike, sir, what do you have in store for us on this post-holiday strategy block, sir?
I think I want to talk politics today. How does that sound?
Uh-oh, let me just find your mute button. Where did that go? Oh, I'm sorry. We can't hear you the rest of the show, sir. How did that happen?
Very good, very good. So in the spirit of the 4th of July and me being the patriotic citizen of the United States, with which I am, I want to go through a few things just to kind of just talk about like the election coming up, because I know that's in the back of everyone's mind as well. And what are the facts? I'm just warning, if you're worried about me showing my true stripes as a Democrat or as a Republican at the end of this strategy block, don't worry. It's not going to be about that. I just want to do a little bit of facts for right now. So
people want to know would you say people want to know what the facts is? And
they might.
Yeah, a little throwback to a little song back there. But anyway, looking forward. I can't wait to hear this, folks.
Very good, very good. So anyway, going through this, oftentimes you'll hear on TV that, or let's look at this from the Republican point of view to start with, and then we'll look at it from the Democratic point of view. The thing that you'll hear a Trump supporter oftentimes say is, a Democrat will say, well, Trump did this, that, or the other, and then the Trump supporter will say, well, have you looked at your 401k? It's way up. You should be happy. Okay, and that's fine, because the markets were very prosperous, and they still are. Even through the virus, we're still right at where we were, or close to where we were in January. And it just seems like every time I'm find myself near some type of political debate. That's one of the comebacks that a Trump supporter will often have. And so markets have done very well under Trump. And then oftentimes people will refer to Ronald Reagan as a phenomenal president for business, and that business started happening again under Reagan. The 80s were the decade of greed because markets were going up so high, and everything was so great in the 80s. They had that movie Wall Street that came out in the 80s because it was so wonderful, and what the perceptions actually were of things. So that's kind of what a Republican will typically look at markets as in terms of where things are. And once again, please don't email me or send me hate mail or whatever. Flood my Twitter account, which I don't have, on things that, oh, you evil Republican or oh, you evil Democrat, because it's not where I'm going with this. Now, let's look at this from a Democratic point of view. If you look at the Clinton administration, well, you look at the 90s. Things were amazing in the 90s. We had the cell phone come in. We had this new thing called the internet that Katie Couric didn't even know what the heck it was in the early to mid 90s. We had all these wonderful things happen. It was just a generation of prosperity and of growth. And then after that, we had Obama come in, and Obama had all these great high markets, and things were wonderful with it. So the Democrat president is much better to have in the White House for markets. So I did some actual looking, and I went to a website that just compares the market returns for all presidents all the way back to Herbert Hoover. And with this, I haven't fact checked this, but just me being the market participant that I am, this does look fairly close. I'm not going to mention the website, but this does come pretty close to what I know of the markets to be during those times. So a couple of things in terms of, if you were to look to see where presidents ranked after 42 months into their term, which is where Trump is right now, 42 months into their term, we have Obama ranking first, where the S&P was up 67%, Clinton ranking second at 45%. That's the increase on the market overall, not the average per year, of course. George H.W. Bush ranking third, so George Bush Sr. at 42%, and then Trump is fourth at 37%. Below that, we have Jimmy Carter at 19%, Reagan at 16%, and then George W. Bush, the second, the son, at negative 19% at this point in time. So with that obviously proves that Democratic presidents are better than Republican presidents. Well, not quite. The other thing that needs to be factored into this is the fact that the second that Trump was elected, between November and December, markets skyrocketed. Markets went through the roof. I remember we had that 100-point S&P drop on the night of the election, and then markets just went consistently higher. And I remember talking on this show, we were joking about, okay, the VIX is in single digits. Trump is not a single-digit VIX president. We were just kind of joking around about that. So that's one thing to keep in mind. The other thing to keep in mind is that when Obama came into office, we actually hit the all-time low, not the all-time low, but we hit that S&P at 666 was the level of the S&P. And so with that, that's kind of one of those things to where it was very low, but I don't know if it's necessarily to his credit it went higher just because it was just that insanely low. With that, you can look at what happened during the Clinton years. Does it necessarily mean that Bill Clinton was this wonderful stock market president? Well, not exactly, because we did have a whole change in society with that whole internet thing coming on in the tech bubble. Does that mean that George W. Bush was that awful because it went down so badly? Well, the bubble had to burst at some point. Does that mean that Trump is so phenomenal because of the fact that he continued to take a higher market and had it go higher? Well, not necessarily. We've had a lot of policies that have dictated that. So with that being said, this is something that it's a lot of fun to debate when you're just going out and hanging out with friends. But when you're making serious investment decisions, what the takeaway of what I want to have from today's strategy block is that America is much bigger than one man. In that just because one man's in the White House, our founding fathers did a phenomenal job of setting up government and setting up a system of checks and balances. One president, I don't believe, has the power to make America a horrible place and just end America as we know it. But on the flip side, I don't believe that a president has the ability to make America this euphoric thing that's better than anything that's ever happened in the history of the planet. One man doesn't do that. Our society does that. And so as you're looking at this, trying to make decisions over, well, if Biden gets in office, is this the end of America? If Trump gets in office, are we going to have more coronavirus? And is that going to be the end of America? Or as you're making these decisions, just understand that we've been through a lot as a country. And as we've gone through a lot, it's not the president that makes America great again. Whether you're Democrat or Republican, it's the American people that do. And so on this, understand that America is far, far, far bigger than one person, whether you're a Democrat or Republican or something in between. As you're making your decision as to who to vote for this fall, understand that regardless of who wins the White House, America is still going to be here in 4 years. Does the president have power to make things better or worse? Absolutely. But remember, we live in America and we have a system of checks and balances. And because of that, the American people will ultimately make America great or bad going forward. And that is the strategy block for today.
And it's the people who make this show great. So without further ado, let's see if we can squeeze a few of them on, a little bit of the old mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. Let me just reiterate what Uncle Mike was saying there. Not just the politics side, but just the people. You guys are awesome. You guys truly, I love our audience. I'm not sure if I say this enough here. I do truly love our audience here. You guys are the best. You're reasonable. You're level-headed for the most part. You make great, insightful comments, great suggestions, things you'd like to hear on future shows. I like to think that we've, had some hand in that over the 13-plus years now we've been doing this, trying to attract a pretty level-headed, responsible audience. But you guys, you always surprise me. You guys are the best. Like, for example, last week we were joking about our great debate of Italian beef versus Philly cheesesteak. And a lot of you were chiming in with, there was clearly some lingo in Philly that I was unaware of. And I said that on the show. I was like, I don't know what these people are saying with provolone. I was trying to interpret it. Well, one of our listeners who said that, J4340, he chimed in and said, great show. Now you won't feel like such a vulgarian. Happy 4th. And he sent me a link to how to properly order a Philly cheesesteak. Let's just break. This is a very lengthy screed here, listeners. We'll just share the salient nuggets for any of you who find yourselves in Philly in the near future. So you too cannot feel like a vulgarian. They say, for those who are unaware, there's a right and a wrong way to order a Philly cheesesteak. GNUS Steaks prefers it to be done in the right way. If you're looking to order a cheesesteak from GNUS, there are two parts of the order you'll want to keep in mind so that you can say what you want the proper way. The first part is the cheese. After all, what is a cheesesteak without cheese? GNUS Steaks offers Whiz, American, and Provolone as its cheese options for its cheesesteaks. The second part of your order has to do with onions, a staple of the Philly cheesesteak. But onions aren't for everyone, so you have to decide if you want them on your cheesesteak before approaching the order window. Combining your cheese choice with your onion preference, you should sound something like this. Could I please have a Whiz with? Meaning cheese whiz with onions. I can't even read it. Or if you don't want onions, you can simply say Whiz without. Your other options are American with or Provolone with. Now it all makes sense to me. So thank you for that, J4340. You confused me initially, but then you followed up with the explanation. So that's why I say you guys are the best. Just like this one, Mr. Uncle Mike. This comes from your buddy here, Suleiman. Suleiman, he chimed in on last week's show when you were talking about how you couldn't make heads or tails of buying these indices at these levels. He said, what about the NASDAQ? Could I buy that one? Because that one is up on the year. And you chimed in that you don't really play in the NASDAQ. He followed up just to say thanks. He said, just heard it. Thanks, Uncle Mike, for the reply. I'm waiting for some dips, ideally at 10,000 or at least 10,100 to buy. NASDAQ looks like it's going above 10,700 with the upcoming earnings season. There you go, Uncle Mike. Even you getting some love here on the show. What do you say, sir?
I do want to quickly comment on the email before. That guy is clearly not from Philly because he used GNUS as an example rather than Pat's cheesesteak.
I was waiting for someone to bring that up. I know there is a schism. There's a schism in Philly of the two places to get cheesesteaks. So,
well, yeah. Well, the difference is GNUS uses canned imitation cheese for their Whiz with. and Pat's uses actual Cheese Whiz for their Whiz With. So, and to his credit, he does have his order correct. Whiz With is the correct way to order a cheesesteak from Pat's. Although personally, I would make the argument that Jim's Steaks on South Street is superior to both.
So now we're treading into dangerous waters. First, Uncle Mike's get into politics. Then we go even more political with what is your favorite Philly's cheesesteak out of Philadelphia. So all of you Philly dwellers, let us know. Uncle Mike, sir, what say you about your love here from your friend Suleiman, who's clearly an Uncle Mike fan?
Oh, gotta love it. Much love as well. Yes, I mean, if we that would be nice if the NASDAQ would go to the 10,700 mark. And in terms of cheesesteak versus Italian beef, I mean, just being from the Chicago area, I've had Philly cheesesteaks. I've been to Philadelphia a number of times, but I'm more biased towards the Italian beef, and that's one to where even my favorite one, if you go up to Vicky's and McHenry on the chain of lakes, that's the best Italian beef in the Chicago area, in my opinion.
There we go. Open another can of worms. The favorite Italian beef. Who knew these local delicacies were so entrenched and so strong? But again, you guys are the best audience out there. I'll put you up there against any other audience. You guys are the best. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, where we tell you what we're keeping an eye on our trading screens until the next time we gather here together on this show on Thursday. Obviously, there's a lot to unpack. Apparently, it's a week where China matters again. Last week, China didn't really matter a whole heck of a lot. This week, China's back on. So the China switch is on. The Corona switch is off, in case you're wondering which switches are on and off, apparently, this week. VIX, like we mentioned at the top of the show, saying a little bit frothy, saying a little bit interesting into this rally, showing that perhaps there are some other interesting shoes left to drop. So let's start there. Mr. Meatball, sir, what's your take on the resilience of VIX post-holiday and what you're keeping an eye on for the rest of this week, sir?
So, yeah, I was trying not to stomp on Mike's Italian beef push, which is to be fair, a very, very salient point that he brings up in terms of the underrated quality of an Italian beef. I'm really interested in, whether this is kind of that moment of irrational exuberance, that blow off the top high in some of these names. We're getting to a point on some of these valuations that, you have to justify some pretty incredible things for, stocks to be priced the way they are. Although I would point out that the Tesla shorts that were sold over the weekend completely sold out. So there may still be some bullish upside to Tesla and some of these names for the time being. It's one of those where, you ride the roller coaster, but be quick to jump out and parachute down, because you don't want to be on that thing as it goes down that steep slope and really takes a dive. Similar to like what happened in February and March, right? You got a couple of days to get out. So when we see vol really blow up, when we see, that names like Apple have, and this will happen someday, 2 down days in a row, that might be a signal that, hey, maybe it's time to bail. Don't be surprised if that's as we're having earnings that we see the market maybe get a little softer.
There you go. Everyone's waiting with bated breath for that next shoe to drop. Mr. Uncle Mike, sir, what are you keeping an eye on for the rest of this week until we gather here together on Thursday?
Well, I mean, we're still in a channel between 300 and 320 on SPY, and we're getting near the top of that channel. And so we've been in that since, I believe, May 26th, if my chart is correct here. And in looking at that, buy the dump, sell the hump, don't diddle in the middle. And what I'm looking to do is, if we dip, I'd love to sell some put spreads or something along those lines, but my hands are tied until we become positive on the year. If I do sell put spreads, it's going to be a very tiny position, but with this, I think that if we're going to go higher and we're going to have an up year, we got to go positive on the year first. Until we do that, we're still negative, and that's just a harsh fact of reality. I think that it's just going to be interesting to see. I know we talk about the Fed put. It's not really the Fed put anymore. It's the put. And so whether Democrat or Republican, it seems that if it's an election year, you don't want a down market in an election year. So that's what I'm watching right now.
There we go. All right. Welcome to the end of the show. That music means, of course, we have come to the end of this journey. But you're saying to yourself, you know what? I need more journeys in my day. Maybe I want them sooner than usual. Well, you're in luck today. You're going to get your crypto rundown, listeners, pretty much immediately after this show is done, which is kind of a fun treat for you guys. Mixing it up. Got to change things up a little bit here in the studio today. But before we do that, let's go back around the horn. Let's go back to the uncleest of Mike, sir. Mr. Uncle Mike, if folks are intrigued, they want to call you up, talk politics, or maybe some markets too. Where should they go? What should they do?
stcharleswealth.com. Check out my website. I'd be more than happy to talk to anybody about anything. I'm a talkative guy, and since most of my clients are online, I have a lot of phone conversations and would love to talk to anybody. Give me a call. Check out my website, stcharleswealth.com.
There you go. stcharleswealth.com is the place to go. Mr. Meatball, if they want to call you up, maybe talk about politics or talk and debate cheese steaks or anything else VIX related, where should they go? What should they do? Looks like he's lost his connection. You know where to go, though. OptionPit.com is the place to go, listeners. Check them out. The Vol Trading Club, the Legion, as we call it here, the Pit Chat, all sorts of other good stuff. OptionPit.com is the place to go. And on behalf of the Greasiest, the Meatballs, and Uncle Mike, and indeed myself, I thank all of you out there. Again, I'll say it before, I'll say it again. You guys are the best audience out there. Love you all. Keep tuning in, keep downloading, keep streaming, keep sending in your questions and comments. Keep explaining how Philly cheesesteaks works. Clearly, it's a very intricate subject. If you like what you hear, keep those reviews coming on your platform of choice so more folks can continue to join this great audience. And if you want more content, just stay tuned. If you're listening live, it'll be pumped right in there for you. If you're on the podcast, well, hey, crypto should be hitting it as we speak. A little bit of an early taste of crypto for you. So all sorts of fun. And we'll be back again later this week. Of course, boot camp coming back. You guys love that. We're going to give you more taste of that. Going to get you your OPR. Going to get you your TWIFO. Going to get you your vol views. And we're going to be back again on Thursday for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.